Are you doing a catch-up contribution to your 401k? That's going to change here in 2026. Listen to find out why. So a couple things here, folks. A couple things that's going on is in 2026, there is a new rule about catch-up contributions, meaning that extra money you put into your 401k every year. Right now, you can do $23,500. That is the most you can do to your 401k until you hit 50 years old. Once you hit 50, you can do an additional $7,500 to your 401k plan going forward. You used to be able to do this to your pre-tax contribution no matter what. That is changing now in 2026. And the new rules is if you make too much money, you can't do the pre-tax version of this. So, for example, if you make $145,000, and this is your FICA, right, with your current employer. So that's your wages, essentially. So think of this, you work for somebody, X company, and you make $150,000. That's your W-2 wage. You do not qualify to do the pre-tax extra contribution to your 401k. You are not allowed to do it. So that $7,500 you cannot do towards the pre-tax part of that plan. You are only allowed to do Roth. So you can still contribute, but you have to use the Roth portion of your 401k. Now here's the tricky part, folks. If your 401k for some reason does not offer a Roth, then you probably cannot do that contribution at all. But it has to be Roth if you do it. All right, and this includes the extra contribution. If you're 60 to 63 today, it includes this as well. So it's all extra contributions are inclusive within here. So if you're doing this today, all right, and you haven't changed this, because a lot of 401k plans may not tell you to change from your pre-tax to the Roth, that could be an issue. You could get penalized for that. So make sure you are checking right before this year ends to make sure you switch from your pre-tax over to your Roth account. Now, technically, they're going off of last year's number. I will say this though, and the rules aren't completely clear, but I would say if you feel like you're going to make more than that this year, I would not do the pre-tax. It's very likely they make you switch over to a Roth, pay taxes on that money, maybe penalties too on money you made in there. If you're close to that number, I would switch over to a Roth to be sure. I would call your plan provider if you have additional questions on your specific plan and how that works. But it's very important here. Now, one thing, it is FICA income. So with that, if your wife makes more or your husband makes more money, that is not counting towards that. It's your individual income they are looking at there. So keep that in mind as well. But you make over 145, you cannot do that pre-tax. It's a new thing, right? 2026, January 1st, it's happening. But make sure you are aware of this and you are switching, right? If you look in your 401k, you should have additional contributions when you get your contributions tab. And on that tab, right, you might have the pre-tax with a percentage. You might have 5% going towards that. If you make over 145, you can't have that anymore. You got to switch that 5% to the Roth portion of this. And this is not your normal contribution, not your $23,000. This is for the extra contribution after you're 50. All right? That clear, everybody? Hopefully it is. If you have additional questions, put them in the comments below. Definitely answer those for you. Good luck with the end of the year here coming up, and good luck with 2026. Definitely subscribe to our channel for more information like this and how to make sure you are financially prepared as we get closer and closer to retirement. Talk to you soon.